Hello and welcome to Electric House. My name is Brian Carsgaard here with Josh Olswich. Hey, Josh.
Oh, Mr. Brian, how are you?
I'm doing well. How are you?
Good. Good. We were talking in the pre-show. It's gotten a little cold here in my neck of the woods. That's all.
Yeah, it's a little chilly, and the markets don't look great either. But that's okay. We're still here. By the way, we're live over at Flip.xyz. If you haven't used it yet, you need to be using it. It's so good. Our beta is live. We've got sales information. We've got your floors, and we've got your top holders, exploration, rarity, whatever you want to do, you can do it on Flip.xyz. If you don't have the potential to do it as is, then just let us know, and we'll make it happen. But there's so much cool stuff that you can do if you want to look at information just on a per marketplace basis. You can do that. We just opened up our Looks Rare order book, which is super cool. So whether it's on Looks Rare or OpenSea, you can check out what the market looks like. You can follow stuff. You can follow collections. You can follow assets. You can follow wallets. Get an idea of exactly what's going on, what the floor of your favorite stuff is, what the recent sales have been looking like. You can do all this on desktop and native mobile app. I think you'll really like it when we introduce notifications in the native mobile app, so that the wallets that you follow, you can get notifications of their activity and that kind of stuff. We're really excited about it. Thanks for checking it out, Flip.xyz. And Josh, thanks for letting me show my stuff.
You guys don't have Solana yet, right?
No, Solana.
Just because I was interested in how that's shifting. You know, how the flavor of the week NFT sales are shifting to Solana, at least seemingly based on what I'm reading on crypto Twitter.
Yeah, we want to make sure we got great coverage of Ethereum first, and then we'll probably spread out on the EVM side of things. Getting data from a blockchain and then turning that into like all the stuff that you need to show a curated marketplace, like what's the price on all these different exchanges, centralized, decentralized, whatever. It's pretty darn hard, even when it's just ETH. The number of blocks, the amount of data that comes in on those, the caveats, like it's crazy, man. You don't just like plug into OpenSea's API and therefore you get all of the like order book information from them. We get the sales and the asset data off chain, but the stuff that's not on chain, from on the chain, you have to get it from the API. And then when stuff changes, like they cancel their ask or something like that, you have to handle all that yourself. Their API is not near as clean as you would think. So a lot of work that goes into getting that support for all the exchanges. So we want to make sure that we do that real well for ETH layer 1. And then we'll expand it out to Immutable or Avalanche, kind of the EVM places that are important. And then we'll go to the other chains. One of the problems you run into is you go to places with faster blocks, more transactions, and you might be doing 100 or 1,000 times the data processing and getting 1% of the volume. So that's a little bit of a challenge with it. So anyway, we've got a lot of stuff.
APIs, from my experience, are terrible. Absolutely terrible. There's no standardization whatsoever.
Yeah, NFTs in general could use kind of the equivalent of web standards. If anybody's familiar with the way web standards worked, when all the browsers used to do everything very, very differently, now they kind of handle things the same. The NFT specs would do well to do by that too, not to mention the exchange side of things. But anyway, a lot of data challenges, but we don't care about any of that. We just want to make it look great and work great for everyone that's using it. So check out Flip. We've been working really hard on it. Anyway, that's enough of that. I got the Bitcoin chart up here.
So is that the allotted section of NFT talk for the show? Because if so, I'm in.
That might be all fine. I can handle. That's fine. All you need to know is that, Bored Apes are still crazy high. The ape token was also crazy high. It topped out.
I asked the good people of Twitter what they'd like us to talk about. The token was one of those things.
Yeah. So it had a temporary, it doesn't look like much of a bottom on the daily. Shoot, it's even recovering. This thing is just, it had this blow off top.
It's your classic flavor of the week. Like, I don't even know what to call it other than just like a shitcoin. Flavor of the week shitcoin. Like, here it is.
I don't care what kind of coin you want to call it. I wish I owned it.
I wish you owned it today, but give it a couple months. Like, look at ENS and compare that to Ape. Look at any other alt that's been released. There was this great article by Jump this week that at any given time horizon, most alts go to zero against BTC. Just a great, you feel it, you know it in your loins as a non-alt trader, but you love to see the data to support that, obviously. So go ahead. You're talking about Ape.
Well, the blow off top happened because of the Ape coin requirement to go alongside their land sale. And it immediately dumped whatever 20 something %. But this recovery is pretty strong with volumes. I don't know, man. Like, how are you going to bet against it? It's just rocking and rolling. So maybe it'll continue. Anyway, it's Ape stuff, Bored Ape Yacht Club, and then everything else. Like, almost nothing else matters in the NFT landscape. The floor is like almost 150 for Bored Apes. Mutants are at like 40 ETH floors. Like, mutants are basically higher than everything else. Certainly the Yuga Labs ecosystem, there's nothing higher because they also own punks and stuff. It's crazy. It's crazy.
Are the Moonbirds out of fashion yet?
No, but the floor is around 30 ETH, and their volume that was so extraordinary finally calmed down. So, that has an impact.
Yeah. Speaking of like NFT GameFi play to earn, I saw Axie Infinity was just melting down as well. AXS, the token.
Yeah, well, their whole play to earn thing just not rocking. It's that I never liked that system, but it's people did really well with it for a while, and now they're not, because the framework that makes it worthwhile for a bunch of people in the Philippines or whatever that were, playing it for paychecks, once that becomes unnecessary, it's reflexive on the way down as well. So we'll see how Ape holds up, but shoot, if you minted an Ape, you now have like more than $500,000 worth of stuff by doing nothing with long-term capital gains. And that's crazy. That's crazy. Yeah. I actively shopped them when they were 3 or 4 ETH and thought they were too rich and didn't do it. I didn't even do one, which was really stupid. So anyway, sucks to be me.
I was just, I know we're all over the place with NFTs or whatever, but I was going through this timeline this week of historical crypto events. I didn't realize like punks got released. Like, where was this? I'm trying to find it. Do you remember when they got released?
2017.
Okay, yeah. So June 2017, like during the block size war for BTC, CryptoPunks got released. I just don't remember hearing anything about it, right? Well, Crypto Kitties, yes, that was a few months later in October, but I know like they just kind of launched and were kind of under the radar for a long time.
Right? Oh yeah, you could get extremely rare CryptoPunks for hundreds of dollars at the most. And yeah, they did not pop off until they did, and then when they did, they did. Anyway, so if we look at the landscape currently, we see Bitcoin looking like garbage, Legacy looking like garbage, Ethereum looking like garbage. Dixie, let's just start here, Josh. Dixie, finally a down day. 1, 2, 3, 4, 5, 6 straight extremely strong up days to go from 100 to 103.5, a 3.5% or so change.
So like a radio station.
Yeah.
103.5 FM.
103.5 wrecks my bags. And the top of this green box is a 15-year high, something like that. No, not a 15-year high. A 7-year high, 8-year high, 7-year high. A match of 2017, but that whole range is kind of the top side of this, whatever we've had. the 15-year range would take it all the way to 120, back to February 2002, when the tech bubble was good and fully popped, and kind of peaked the bear market back then, and then the dollar tanked all the way until 2008. But the rise from the Great Recession was not near the same as the fall from the 2001 recession. So recession up, big bull market, way down, and then recession up. But that turned into a big range because this is when QE kicked in. Then there was some recovery, then some chop, and now we're running. It looks this looks like it wants to keep running to me. I hate to say that, it just looks that way. This chart, do you agree, is driving everything else in the world? So should we just start here?
Oh, I agree 100%. Somebody from Charles Brovard, I forget his name, but his last name, how to say it, but from Forbes, I sent him a note this week because he had asked me for a comment on price, and you have to lead with the DXY. It may be symptomatic of everything else going on, but at the same time, it also helps drive crypto prices, I think, certainly. It's just, if that breaks that level, you can't be bullish. It's harder to be bullish on anything else against the dollar, right?
Yep.
It's just that simple. So we really need to start relaxing on the dollar. At the very least, go sideways again and not just scream higher and higher and higher. I mean, that move on the daily looks like ETH does when it runs, right? Like that parabolic nature to it. Just crazy. And like USDJPY getting absolutely murdered too.
Murdered. The pairs, the Dixie is a index.
Yeah, the constituents, the euros also in trouble.
I mean, the euro is the biggest of them. JPY, I think, is second. Then British pound, krona. I can't remember what else is in there. We can look it up. But the USD JPY is like, look at this. This is a monthly chart. That is, it's just TA, right? Just trend line breakout, reconsolidation, and then moon, I guess. The Japanese are doing yield curve control is the fundamental component behind this, but I mean, their currency is just getting obliterated. Obliterated. Yeah. Look at that. Yeah, look at that on a weekly basis. Should this get a technical correction? Yes. I don't know what to say beyond that. You look at this
it's hard for me to know and understand like what the fundamentals that would reverse this would be, because we're only headed for more rate hikes, right? So there's a meeting next week, FOMC meeting on the 3rd, I believe.
Yeah.
So I don't know. I don't know. Aside from printing dollars, how does this reverse?
Yeah, it requires changes. I mean, we have an interesting time right now, and I do think CW is right here that this is Brett Johnson's dollar milkshake theory. So dollar is going to eventually lose a lot of global power, but first it hypermoons.
Yeah, I mean, we're seeing it happen real time, aren't we?
Yep.
Just the speed is just incredible.
Look at this Euro USD breakdown. It's terrible. So bad. I mean, all of these, theoretically, it looks like the USD-JPY pair ready to chill. This looks like it could be, spend some time here before going into essentially price discovery to the downside with the Euro. So it could back up, right? It could, things could calm down. Hadn't yet. It hadn't even thought about it. And it's putting pressure on absolutely everything to an extraordinary degree. And what's crazy is when you look at it, there's plenty of room to go if it breaks out, at least when you look at it as a Dixie as a whole. And what appetite is there for them to slow down? The Fed doesn't really want rates to go too crazy. So maybe that's what stops it is they kind of press pause on that front. But and the reason for that is debt service, right? When yields go too high, servicing our own debt becomes more tricky. We've completely retraced everything yield wise since certainly COVID, but like we ran past that so that we're making actual new highs, breaking out of long-term ranges. The 60-40 portfolio is getting wrecked. We talked about this 200-month moving average on a 30-year yield for a while. Average mortgage rates are like over 5% now. I locked in like around a 3% rate not that long ago. So for a 30-year fixed with some extra caveats in there too. So like I could have gotten in the twos. So a 2-point raise in rates. People who are, if you're under a construction loan or some non-fixed loan, like people could be in trouble. And that's where things start to get a little feisty if they go over the line. You know what I mean?
Yeah, we're going to start seeing things break apart a little bit at the seams for sure. That's going to be something to watch if 30 years keep going up, right? Because that just means that your monthly payments go up. Then eventually you hit a price limit where people just can't pay their loans, right?
Yeah, we know some people in construction loans who a year ago could have gotten 3.5, and now they're getting quotes for 5+. And it's like they had one loan for their construction, and then they lock in a 30-year loan after construction, and they're screwed. It's like their house that they thought was going to cost, I don't know, whatever, $2,000 a month is now going to cost $2,600 or $2,800. That's a big difference for a lot of people.
Yeah.
Jack in the chat says, as a side note, many commercial loans are also floating rate, and that's a good point as well. And people just assume, oh yeah, we'll refinance on the tail end, and oops. That can do two things, right? It can put a damper on demand, but it can also reduce inventory as a whole. People don't want to put their house on the market because they don't want to buy anything else. Like if they have a 3 or something percent, like say 2.5 to 3.5% rate now, which is what they've gotten over the last few years. And then they're like, okay, well, the best we can get coming out of this is 4.5 to 5.5. Then that's not very tempting to sell your house. So you could have inventory go down, but for those houses that do, maybe the prices start to come down too, or maybe not because the inventory goes down. I don't know. Interesting market dynamics.
Well, that was happening with used cars too. Like people were selling their used cars at this crazy value, but then new cars were also more expensive. So it's like, it's a tough thing to navigate.
Yeah. Jack, I'm not sure about this. This is why home sales slump and likely see a real estate pop. I don't think you have to see a real estate pop. Right now you're having this scenario, and it's starting to change in some cities where, but in a mid-market, like where I live, you're seeing people come from more expensive places and buy here, and there's 20 offers for every house and that kind of thing. So a slump is not the same as a pop. A slump could be you don't have to pay over asking, or a house sits on the market for 2 weeks instead of like 2 hours. So I don't think you have to pop just to bring it back to normalcy.
I mean, it is insanity right now. There's no denying
Of course,
that.
yeah. And you look at that, and then you look at the Fed's position, and they're probably not wrong trying to put that pressure on the market. But it's having massive effects on everything else, right? Like you look at the S&P, and sure, the index is not so bad. You look at the NASDAQ, and the index is not so bad. But you go to individual names, and like those, we've got like Eiffel Tower setups. You go to ARK as an example.
I think ARK's in serious trouble.
Yeah. Because look at what they hold. Like Teladoc was one of their top holdings. It had a top to bottom 71% already.
Certainly not investment advice, but just based on what the chart looks like, that is That is ugly. That is brutality.
Yeah. They were buying Teladoc before earnings. Earnings were atrocious. Like it was something stupid. Like they lost more than their share value. And they lost 37% of their market cap overnight. And then ARK came in and bought like some insane number of shares the next day. And Kathy's, sipping daiquiris in the Bahamas with the FTX conference.
Yeah, that purchase across the board is interesting timing, considering, I don't know, it just looks bad across the board. There's nothing else really to it,
Yeah, I mean, you can point at like weekly RSI, bull div, but this is bear market. We've done this before, right? This is our bear market hopium. Like the RSI can work its way all the way back up while the price really doesn't do anything, longer and longer and longer. Maybe that means the downside's not another 90% or whatever, but it doesn't mean it can't cut in half again or something. Especially when you see the impact not really occurring on the indexes yet, but they do look very weak. But anything outside of passive, I heard some arguments. All these passive strategies are just still being passive strategies, right? People allocating the NASDAQ, allocating the S&P. So those might be holding up, but all these stock pickers, all the meme stocks, all the Robinhood stuff, everything that individuals were buying is down 60% or more.
Yeah, I mean, all these charts could coin. You can go down the list. Their all-time lows are at all-time lows.
Yeah, coin looks atrocious. Here's Robinhood because I see that one first. I mean, is it a blow off to the bottom? I mean, maybe is there value here? Look at that. From the daily closing, 82% if it closes to where it is now. Top to bottom is even worse. Yeah, because actually that was weekly closing. Daily closing to low is 87% for Robinhood. 87% in 190 days. I mean, on the stock market.
I can see some white coffee and accumulation there.
Yeah.
Like, I mean, that setup at the bottom, I'm not a Wyckoff expert here. Okay. I don't own any of this stuff, but I'm just saying it has a chance at bottoming.
Well,
because that would be the, I forget what it's even called. The spring. It's unlike the spring. Yeah, there you go.
Coinbase.
Coin had their NFT launch, limited. I asked you what you thought of it. You just said it was just too few people. I agreed. They
don't have enough people in their beta testing.
No, I mean, all these charts. What are you going to do with that? Does that look bad enough to buy? Like, not thinking about what it is, but just.
I personally
starting to for sure.
I think Coinbase is starting to become literal value. 25 billion. FTX's private market cap's like 30 or 32 or something. So Coinbase is worth less than FTX now, as an example. FTX is not liquid. FTX would be getting crushed too right now, I'm sure, if it was public, but it's not public. Illiquidity as a feature. I mean, 200 looked pretty bad, and that looks like the moon now. You got to double to get back. It's a double from the 200-day moving average. That is not good.
Yeah, it's very far away from the mean.
I'm not bearish on their NFT launch, by the way. I think they'll still be fine. I don't even think they have the centralized version of it yet. So, like, if you can do the Coinbase beta as is, then you can also do OpenSea, MetaMask, LooksRare, the crypto native stuff. So they're not doing anything yet that like onboards non-crypto natives. So I think when they make it more attractive, centralized trading, custody, that kind of stuff, maybe it'll improve. Maybe it's just the stuff is outside of people's price ranges. Even 0.1 ETH, it's $250, $280.
I think we're talking about inflation plus rising costs of cost of living in general, rent, mortgage, whatever. It's just like a double whammy for people.
Yeah.
It's hard to, I agree. It's hard to want to like gamble when you can't like feed yourself, like we're approaching those levels. Somebody posted this from Fidelity, Timmer. I don't know his full name, or first name, but they were comparing a Goldman Sachs basket of Bitcoin sensitive equities to Bitcoin, and the equity basket's already starting to break down here from the range. So if anything, crypto's been rather resilient, as bad as it might look across the board.
It has been resilient. I mean, alts haven't. Like non-BTC and ETH stuff has been getting hit pretty hard. But
yeah, AVAX, somebody was talking about today, just looks like it fell off the table. Don't really know why, but yeah, this is a rough setup.
After this Monday or last week, I don't know. It doesn't look good.
Just the correlation to legacy is just rough right now. It's 1-to-1. You can't argue that.
Yeah, it's just true.
In a bear market, we all trend together, and that's, I think, what we're seeing. I don't even think we're technically in a bear market, are we? What's the technical definition of a bear market?
Crypto?
Yeah. I'm sure we're below the 200-day moving average, but
yeah,
we're still in the same range we were in all of 2021.
I think crypto is technically in a bear market. It's below the 20-week, below the 200-day.
I'm not going to disagree, but I just don't have like a strong technical definition for that. I was randomly looking at these gold prices. This is like way out left field stuff, but it's like gold USD per ounces of gold as like support and resist levels for BTC. And it doesn't tell you anything you already know, that like 30K is probably a support, but just interesting how it's sort of lined up with that.
One other caveat on the bear market or not.
Sure, yeah.
We're 44% off the high. So, I mean, combine that with the trend following stuff. We're not at new lows, but that doesn't mean it's not in a bear market. A bear market doesn't require being at the lows.
Sure. So. It's just hard for me. It's clearly bearish on trend, but
yeah,
to say that we're like, we're not 2018 bearish. We're not as bearish as we were bullish in 2020, leading into 2021. Clearly the trend metrics are telling you be careful longing any of this at any point in time going forward, because it's all leaning bearish, like you said, below the cloud, below the 20 on the weekly.
So question.
Yeah.
Inflation is at 8%, but when we look at what should we own, everything's losing against the dollar. So the dollar is a shit coin, but it's like everything else is worse.
Yeah, I don't know.
So it's like you're lucky if your cash, if you're only losing 8%. Like, so the ideal then is probably like these stables earning 8 to 10 to 20%. That's the dream. To Jen Spartan wins.
Just to be flat against inflation. Yeah, I mean that's
flat against inflation, because you're keeping up with the 8% inflation. And yeah, Jack is right. This is the definition of stagflation, which we did predict on this show, but it doesn't make it easy to trade.
Have you seen this DeFi TVL lately? Look at Anchor. It's a vortex. It's the siren song of the 18 to 20% for USD.
That's crazy. I didn't even know that was happening.
Everything is just melting against it. It's wild to see this. I hope people make it out okay of this thing, but if we do have a broad bear market, I don't think UST is gonna hold up too well. But I'm happy to be wrong about that. They haven't bought
USD what? USD yields?
UST.
I see.
They have this 1.6 billion now. This thing's gotten crushed as well against USD. This reserve to shore up any issues, but UST is what, 20 billion circulating now. It's
Yeah, it's
18 to 20. That certainly isn't.
I don't know. It just looks like a
Entire
pound cake
reserve.
to me.
Yeah.
T-less, where's the best place to generate yield on stablecoins? I wanted to bring this up because I think it's a very personal question. It's based on your risk profile. So the least risky is to diversify where you keep that custody, right? Your various degrees of your own self-custody and centralized custody, and divide and conquer so that if one of them fails, you don't die. At the same time, the more you divide, if you reduce your risk profile to like things that are less trustworthy, the likelihood that one of them does die is higher. So do you put all your money in one that you really, really trust, or do you put some of your money in different ones, but some of those you don't trust very much? So you got to find that magic spot. And I would say the ones that have a track record that you can trust very highly, but probably no more than some percentage, right? Like, and ideally that percentage being less than the annual yield on average of all of them, so that if you lost one of those sources, that the yield from the others essentially makes you flat. I think that's the analog that I would try to use.
Yeah, I think being in stables and collecting yield here is definitely a strategy that's viable.
Yeah.
If you want to talk about like least risk, like, can I name names? Am I allowed to say like USDC?
Yeah, I mean USDC on FTX or
I would even go that.
Gemini.
I'd go straight to the source. Go to Circle. They do a USDC thing. You know, it's like limits like 10 grand or 100 grand, whatever it is.
Yeah.
Not that I'm advocating to do this or anything, but I'm just saying, like, this is the landscape. You've got Anchor and the Ponzi that is the potential Ponzi that is Terra at 18 to 20%.
I wouldn't go to those. So I would go to the ones that I trust that they're part of the stable swap game. So that's Curve, probably via Convex. That's Stargate for layer 0. Like some of the ones where they're doing the good teams, managing stable swaps, that kind of stuff for on chain. I don't know what the yields look like, but maybe Aave for lending. So at the same time, FTX, Gemini, both are paying out pretty decently. I think BlockFi goes down all the time. I don't think I'd use BlockFi. And then to your point with Circle.
Yeah, it depends if you're a US citizen. It depends if you're accredited. You know, the list goes on and on.
A lot of things. But I think if you are expecting to average amongst those types of sources more than 8%, you're probably getting a little greedy from a risk profile perspective. With some of those you might get 5 or 6. Some of those you might get 10 or 12. It's a different game when you're doing like some pegged asset or whatever, and it's like, okay, yeah, I'm getting 20%, but like, what if UST loses its peg and is off peg by like 8% when I need to let go of it? You know, like there's challenges there potentially. So
yeah, I mean, Waves is still unraveling.
Speaking I would, and those types I wouldn't even think about touching.
I should have a chart readily available here somewhere, but yeah, Waves. It's my Dixie. I just want to look because they still had over $1 billion to deal with as far as shoring up that peg. USDT, is that what it is?
I don't even know.
USDN, sorry. USDN, USDT. I'm just curious what it's at. It's 96 cents on Bittrex, yeah.
Yeah, I'm using Stargate personally, but seed investor disclosure, whatever. I know the team. I trust the team. They're the smartest people I know in crypto. I've put stables in Convex many times. It works great. I like on-chain stabling. Sometimes you can earn through like Trader Joe, like some of those tried and true smart contracts, and you can do like USDC, USDT pooling, and they'll have a farming reward, that kind of stuff. Those are the types on-chain that I would personally use.
Yeah, there's risks and everything, right? So just be aware. It can go to zero.
But if you do it in DeFi land, you're going to get better yield than if you do it through centralized parties. But I think there's a serious benefit.
Risk.
That's right. There's serious benefit for not having the same smart contract risk by going to centralized parties.
Yeah, I mean, you can even go to Genesis, not Genesis? Yeah, Genesis, blockchain.com even has a lending service. These are for accredited investors, but they all this stuff's available. And the funny thing, like Maple's another one. The funny thing is all these guys lend through the same avenues anyway, so you can't even avoid, like if you wanted to go to a lender and avoid DeFi completely, you couldn't, because even they use DeFi for the yields, you know?
Yeah, but if they get wrecked, they're more likely to make you whole.
Sure, but just, just a caveat there, right? Like,
right.
It's not like Genesis is somehow immune to DeFi blowing up, because they're still exposed to that.
All right, tell me what you think about this.
Oh boy.
Is it possible that this is just a repeat of like Max Payne via post dump sideways, and we do like we did last summer? Was that last summer? And we have a nice move up to the top of the range after everybody gets chopped up and capitulates.
I mean, we've sold off every high aggressively the next day.
We can call this the kidney bean pattern.
The kidney bean?
Kidney bean.
The clamshell.
Isn't that what a kidney bean is shaped like?
So we had the inverted head and shoulders early on. That failed. We had the ascending triangle, which arguably has failed now. But at least it had a breakout attempt, From here on out, it's just chop and slop. I don't know what that is.
Chop and slop.
It's a good show title. It's a good show title.
Yeah. Human said, I got to sell my kidney pattern. That's if we go to 20K. 20K, the kidney bean pattern goes to sell my kidney pattern. Yeah. I mean, I hate it right now because I'm exposed to the market. I was so close to sell it. I had sold the top at basically my portfolio high. I sucked myself back in. And now I'm just coping with everyone else. So happy to be here with you.
So as far as the cloud, it's 42.5 daily level. If we can get above that, we're home free. We haven't talked about it yet, but I'm still extremely worried about this weekly B band. Where is it? Do I not have it on this chart? I do. Sorry. There it is. This weekly B band stuff is just, I got a bad feeling about this. And on the 20 weekly level, it would be 42 as well, I think, right? What is this? Yeah, sure, 42. So if we're above 42, that satisfies the daily and the weekly requirements as far as on a technical level.
Busting out the B band width side of things, I need to move us.
This is at a historic level of squeeze here.
Yeah.
Which maybe doesn't.
But that's very bear market things. We haven't done that significantly since 2018. You and I.
Yeah. Now, does this feel like 2018 to me? Not really. 2018 was the end of it was just nothing, flat, right? Tether blew up. There was the BCH, ABC, SV stuff, right? That the schism amongst the scammers. And then legacy markets ended up blowing up in like November, December, which is ultimately, I think, what broke the straw that broke the camel's back. But legacy could be enough this go around. But as we sit here, it's hard to be optimistic that we're going to turn this puppy around until we're above 42.
We did squeeze significantly tighter on B bands in 2018. Like we went to the can't bear it anymore level of compression.
Right. That's almost the only other time we went lower really was during the ascending triangle in 2015, 2016. That was like 250 days of sideways. But that entire time we were above the 20, right? Like that's the key here. We're below the 20. We are trending below. We are holding below as these B bands are tightening. That is not a good sign if you're bullish.
What I love about the B bands is when they come out of that, how much you get the droopy response, the slack in the line after those tight squeezes on these weekly time frames, because it's always
that's because it's in log, but there's a way to fix that. But yeah, it does look kind of funny.
But you know what I mean.
That's a good sign for bubble too.
Right.
Like if V-bands start to explode,
Yeah,
that's usually
I
the
just
end of the
enjoy.
line.
I enjoy those charts.
And as far as like where can we go, I like looking at the yearly pivots. You know,
Ooh, show me.
26.4 is currently the yearly pivot there, but there's also the 200 week. You know, somewhere in that region, I think is viable.
Yeah, I mean, I really could see just us waiting until that sucker catches up and just sucking the liquidity out of the ecosystem for another several months while that happens. The amount of times you can get, it's so easy to get chopped up in this market, man. It is so easy. And then you capitulate and then it finally reverses for like a week and then you get back in and over again. And you're just like, poof. It's, we are close to the DCA and chill territory. And I know like we could get blasted from a percentage perspective on the downside, but in terms of the like what happens if that breakdown occurs, it just, you know,
I mean, DCA and chill, according to the 2-year MA, is anything
near
below 35.
Yeah, which is like we're really close to that. So
yeah,
we're near the DCA and chill.
Yeah, I would agree with that. Between 35 and the weekly 200. I mean, what else are you gonna ask for? You know?
Yeah, that's. I mean, when I think of things, when will I tell my family it's a buy? When will I tell my friends who've been asking me it's a buy? I'll say when Josh's 2-year MA chart is showing the green fill, then freaking turn on your DCA, don't look at it, and just wait.
When will I give unsolicited, unprofessional investment advice?
Yeah.
No, I mean, it's like I tell people, I like indicators that tell me very little as far as trades historically, and this is one of them that's been on the money. Doesn't mean it's going to be correct in the future, but looks pretty good. ETH is already there, by the way. ETH is already
it's in the thing.
In the thing, as far as on the 1 year, you can't look at the 2 year for ETH. There's not enough data, but this is the 1 year. It's already just like cruising below that level. Just kind of crazy to think, but
yep. Can we talk about one more thing that I had brought up before, but I have not looked at it in a while?
Sure.
I know this has a little bit of interpretation difference, but
as long as it's not Elliott waves, we can talk about it.
No, it's the Coinbase IPO. If we consider that the top, it's really hard to determine the top on Bitcoin because I don't really count this, right? But yeah. Prior bear market from absolute top to absolute bottom, 52 weeks. We are 56 or 54 weeks, something like that now. Yeah, 54 weeks from the Coinbase IPO. So from a time perspective, a Bitcoin hodler has been in pain for that long. If we use Ethereum instead, or if you use that summer top instead, that's obviously much less. But I do think that that's interesting. Like anyone who bought one of the tops has been mad for a year, which is how long it took us to bottom last time. So if we that just goes to my point that I've talked about over and over again. If we break down, I don't think it lasts that long. I think, break it down, consolidate, eventually work our way back up. But by the time you do that breakdown, you're getting some good prices, even if it takes a while to make new highs. Like back here, it was however many. Let's find out. Once it made the actual breakdown to the point that it then started climbing, was another 19 weeks. That's enough time for the Fed to do their overreach, tightening. Oopsies. we did a 275 basis point raises in a row and broke everything. That kind,
Well, imagine another year just in this range from 30 to 60.
Well, we'd just be. You can already hear it in our voices. Like we're tired. What are we supposed to say?
Like I don't even know what this.
Like watching us at the end of the plank, ready to jump.
The price action doesn't even look like anything to me. On ETH, on VTC, on high time frames, like I don't even know what to say from a pattern perspective. It's nothing. Everything's been broken. The head and shoulders, by the way, that was supposed to break down and didn't. I guess that's still in play, right? We didn't break above the right shoulder, but it's all it's just super chop.
It is. When you look at it this way, if it's over, then it looks like the S&P could go down much, much more. And we got a lot of pain ahead of us. So that's always the counter argument, right? Is how long can we die on the stock side of things?
I don't know. I mean, I look at that and I think I'm praying that we're okay in crypto.
Yeah,
stay resilient.
Well, because if we go full recessionary, it could easily hit here, right? Down from 420 to 340 on the S&P.
I mean, if I pull that up on the weekly cloud, levels are quite low as far as edge to edge
where you're headed. Yeah.
We're talking,
Oof.
350.
Yeah, that's the part
which
that
is
good.
All it really is the 50% retrace from the COVID low to the December 21 high. That's 350.
Another 15%. But that's on the S&P 500, the best of the best. Yeah. That would be, what would the size of that correction be overall? Only 25% on the index from the very top. So that's a mild recession.
And NASDAQ, as far as the cloud is concerned, is already on its way to 11.8.
A 50% correction would take it to 240.
It's just not a good look across the board. Hide your wives, hide your kids.
That's pain. That's a 50% correction. That's like everything is dead. Lots and lots of companies go bankrupt. Bitcoin sub 20K.
We can tell you what you want about the narrative for crypto, whether it's uncorrelated or whatever, but it's hard to stay afloat when everything else is melting down around you.
Yeah, I find this outcome extremely unlikely, but we can point at it. That's like something big broke.
We didn't even talk about gold today, but it's not like gold's doing
anything. Sucks.
Like we're talking about where do you go?
Yeah, I listened to some gold bug type of podcasts, and they're also depressed. They're like, this was supposed to be our time. Why are our bags failing? Everything is better than us. We should have bought copper. We should have bought oil. Copper looks like crap too. Oil's starting to look good again.
Could have bought oats or lithium or anything.
Oats.
Lean hogs, probably. I don't know. Wheat.
Probably.
Well, I don't know. That's all I got this week. Just not great across the board.
Yeah, I mean,
forecast for more not great ahead.
The part I hate about it is any outcome won't be surprised. Does that mean I'm going to trade it correctly? No, it probably means I'm going to trade it wrong because it's just so difficult to judge.
I was thinking about this today. I'm like, where do you short this with confidence? Because we're getting these random spikes. Like 2 days ago, we got a spike to like 41, right?
Yeah, that's why I don't think you can. I can't short it. I just am trying to figure out spot or cash, right? And how much of each, and if you carry risk where.
Yeah, that's why the stablecoin yield narrative seems pretty attractive right now.
Yeah. Meanwhile, one caveat of all of this is all of the funds, hedge funds, venture funds, whatever, are raising billions.
They are.
And billions and billions and billions and billions from big names. I've heard everything, rumors, the biggest funds raising everything from $1 billion on the low end to 10 billion on the high end for individual funds.
10 billion?
10 billion. There's some big numbers out there.
I mean, this is just I'll pull this up. Just a smattering of, hold on, I'm trying to sort it correctly. Just a smattering of funds. And I'm not a VC guy. You're not really a VC guy.
I'm not talking about 10 billion in VC, but like as a total raise with some liquid, some VC,
Yeah. But I'm just like, if we look at this list of valuations for those on the pod listening, I'm just showing, like, Paradigm 2.5 billion, AH Andreessen Horowitz 2.2, high of 1.5 billion, FTX 2 billion, Katie Hahn's new thing 1.5 billion, another slug of 4.5 billion from AH, Pantera 1.3 billion. It's like, where does this money going to go? How are there that many quality projects?
That's what's crazy. I don't know. They can talk
Dragonfly,
to me at Flip.
650 million.
Email me.
It's just so much. It's so
however
much
you
money.
want to do it. $1 billion funds, holler at me.
It's so much money. I just don't know.
Yeah.
And the raises too are just crazy for
They're
the
huge.
stuff like this GameFi stuff. The raises we're seeing, to me, just makes no sense. But I'm not the guy to ask about that. I'm just a casual observer. Anyway,
a lot of competition for deploying those dollars, and what's crazy is a lot of those dollars have to be deployed, within a couple of years. So that's certainly interesting. That's all we got. Thanks everybody for being here. It's been a pleasure. Stay safe. Survive. Talk to you next time. Subscribe on YouTube.
Very calming words at the end here.
The people need calm.
In the blink of an eye, the easy river has just run dry. In a house of cards, I feel the breeze wound so tight I can barely breathe. Oh, the change